Welcome to the Krinzman Property Playbook, where we dive deep into the heart of South Florida's real estate scene. I'm your host, Matthew Krinzman, here to guide you through the strategies, insights, and community connections that make buying and selling real estate a science. If you're looking to move beyond the basics, build trusted relationships, and grow your understanding of this competitive market, you're in the right place. Every episode, I'll be bringing on local pros, from attorneys to contractors, to give you the inside scoop on what it really takes to succeed in real estate. So whether you're an investor, buyer, or just curious about the market, let's kick things off and get you one step closer to your real estate goals. Welcome to the Playbook. Hello, everyone. Welcome to the Krinzman Property Playbook podcast, hosted by myself, Matthew Krinzman, broker associate with One Sotheby's International Realty here in South Florida. I'm based out of Aventura, Florida. And welcome to the podcast. So today I have with us David Krebs, one of the local mortgage brokers that I have known for a very long time, and wanted to have him on today to talk about lending and mortgage broker mortgages and help explain what you do, the mortgage process itself, type of different lendings that is available to buyers of all types of properties. And let's get some insight so people understand how it works. So, David, welcome to the podcast, my show, I like to call it.
Thank you, Matthew. Thank you for having me.
Yeah, my pleasure. So, this tells us a little bit about yourself, how David Krebs got into the mortgage business, where you're from originally, maybe a little bit of background on that, and then we'll dive into the topics.
Sure. Originally born in Kendall, born and raised. Been here for many, many, many years. Seen definitely the kind of landscape change every cycle. So it's definitely been an interesting ride. And I think we're now in the initial stages of the next cycle that's to come. Condos, of course, are very hot. You see a lot of the large name brand companies coming in, putting their label on that building. And just with the migration, Texas, Florida are very hot spots for a lot of individuals, not just from New York, from Chicago, from Boston, and then, of course, out west, getting a lot of individuals from California.
Yeah.
So I think Florida is kind of the place to be in 2025, given the trajectory and such. So, so I'm looking forward to what this year brings, even with all of the craziness with the Fed, with inflation, employment numbers, change in government and such. So I think this is definitely going to be a fun and interesting year to come.
Absolutely. I mean, the last few years have been very interesting down here as far as, from COVID and the lockdowns from other states and people migrating here. We've seen essentially an explosion of population, wealth. I think the wealth movement here has been incredible in the last few years from all parts of this country, especially since we were an open state. We're also we don't have a state income tax, which I think obviously attracts a lot of buyers and people to move to the state and establish residency and get the homestead their properties here. But, give us a little bit, before we get back into everything else, just tell us a little bit. You're from Kendall, you're a South Florida native. Obviously, you've seen the ups and downs, you've seen the cycles. What's your background? How did you get into the mortgage business? So I think that your background will help people explain why I think you're one of the better mortgage brokers in town, and I think that helps what your and again, I think your background really lends to that.
So after college, I moved to New York City, worked in investment banking, and the sun up to sun down hours, I think, really were not for me. I saw kind of life just pass you by, right? Yeah. So I moved back to Florida when Alan Greenspan was Fed chair at the time, if people remember.
Sure.
That. And he just made everything very easy.
Yeah.
And so actually I got into lending at that particular point in time. And I interviewed with a company that, of course, is no longer around. And during the interview, they said, we're going to hire you just because of your education. But if you don't hustle, then just know in the first 90 days that you won't be employed if you don't bring any deals in.
Right.
So I had a closet full of suits. And so I put on a suit and went in a couple of realtors' offices.
Yeah. Knock on
and
doors.
Next thing you know, I just basically took the underwriting guidelines home and I memorized them.
Right.
And so I would just go into these realtor offices and have conversations. And during that time, I would just bring in roughly three to six deals on a weekly basis just by driving around. And, we had to mail the packages back then. There was no emailing and portals and things of that nature. And so with all the new construction going on, the condo conversions and such, it just made things very easy and very fluid. 2007, I think, is when the bubble was starting to burst for me, at least. Summer, I would say summer of 07.
That's
when I noticed, lines of credit drying up. Lenders were not able to sell the loans off of their books to replenish the capital needed. And so I basically found myself looking for a job. And so at that particular point, I would say probably September of 07, I started working in the distressed space. So all of these notes that were originated that probably maybe in some opinions should not have been originated. I was doing the workouts for them in asset management, learning how to creatively stretch and pull the notes to make them perform so that we can turn around and sell those notes off of their books and such. And so I did asset management on the distress side till about June of 13, when all the B-piece notes were already gone. And I think it was Wells Fargo who actually started the lending process back up. So I think it was Wells Fargo who said, "Hey, we're comfortable enough to jump back in." And I think that's when money started flowing. And so then, of course, at that particular point, all of the distressed, underwriting positions were starting to dry up. And so I went back to the front of the ship to underwrite for new money.
Right.
And so I did that until 2017. I was a head underwriter for a couple banks, a couple mergers took place and such. And then I would say maybe summer of 17, I started, said, "Hey, I'm giving up a large part of the commissions to my broker who, in my opinion, didn't really add a lot of value other than have all the tools and resources in place."
Right.
So I went out and got my principal broker's license, and then I opened up my own shop.
Right.
And coming on this side versus working at a bank, it was kind of like the Wild West. At the bank, everything is so, scrubbed down and so bottlenecked that coming here, I would say one day I'm talking to somebody who's, squeaky clean, someone with a bank background, type file, to an individual who just says to me straight out of the gates, "I'm not giving you my tax returns. What can you do for me?"
Well, that's typical for South Florida.
I quickly realized that there's just a huge market for basically to place loans that do not fit the Fannie and Freddie model.
Right.
And so I started doing research and finding those lenders who had a huge appetite for the non-QM space.
And let's just say, so non-QM, what's the definition of non-QM?
So non-QM is non-qualified, right? So non-qualified, meaning that Fannie and Freddie are not going to buy the loan. You're not going to run the file through an automated platform like AUS and DU and things of that nature. And it's more on a manual underwrite, right? So you have to, like old school, put the file together, kind of how I started in 2004.
Right.
Figure out the debt ratios. You have to figure out income ratios and things of that nature. And I found it challenging and I found it rewarding because you're starting from scratch and a machine, right? An algorithm is not going to put it together for you.
Right. So now, We were talking what this is like about 2017 is when you went out on your own. You started with DAK Mortgage, which is basically your initials, and now you've been working for yourself, and you have a partner with you on that you work with.
David and Karen. Yeah.
Right. So it's two people, basically. It's a two-person shop. One thing I just want to, what separates you from many other mortgage brokers who are either independent or work under a different, like a mortgage lending company or a bank, you're able to write loans all throughout 50 states. Is that correct?
I primarily focus in Florida.
Right.
So Florida for me is relatively easy to fund.
Sure.
I would say pretty much any kind of deal, right? My Rolodex goes pretty far here in the state of Florida. Mm-hmm. We will touch owner occupied and secondary on a case by case basis. Mm-hmm. And then of course on a national, anything investment wise, anything foreign related, we'll do. Anything commercial, we'll do. So, knowing how to underwrite from, an NOI basis, an EBITDA basis, just kind of cash flow basis, I think is really probably what separates me from the others. Right. Knowing how to put the deal together for it to make sense. And then, of course, that'll help with someone saying, hey, I have an appetite for this particular request. So we've just done so many outside the box deals that I know who has that appetite for what type of risk parameters. So it's a relatively easy place.
Which makes you an asset to a buyer or a person, not maybe a buyer or someone's looking to refinance a property, maybe refinance it, makes you an asset to them because you're able to go beyond just the Wells Fargo. I hate to say the Bank of America, which we all have our opinions about Bank of America, or even some of the local banks. You have those connections. You're able to place the loan with the right institution, not necessarily just a bank, but a lending institution, be it private money or even insurance companies. They have a lot of money and they do a lot of lending beyond just a bank. And I think having that ability, if I'm the buyer or I'm looking to finance, or as a real estate agent, having someone who can go beyond just the normal institutions for lending, especially when it's a hard to place loan or it's a hard, like you said, income tax returns, things like that, or they can't show where the money is necessarily where their money is coming from. It's not that they have to be clean. It's not like you have to show still, but everyone has a situation, and I think that you have to tailor the loan or the lending to that situation, which I think is one of your, obviously, I've always said is one of your strengths. That's why I always tell people, the more curves, the more twists. David Krebs really enjoys those type of loans to do because I guess from you, it's kind of like it's fun in some way because you're putting the pieces together. It's like a puzzle, and and I think a lot of times, the buyer or the person who's looking for the loan, they don't understand that, and having someone on their side to explain those things is crucial. And, as a real estate agent, I can only take them so far. And then I need a professional. I need the lending professional. I need a mortgage professional to explain to the buyer, hey, this is what's going on. This is the loan we can get for you. This is your best opportunity for a loan, be it a Fannie, Freddie Mac, or even an FHA or VA loans, or non-QM, like you mentioned, non-qualified mortgage, where it's a little more difficult to place. So now, South Florida, in particular, is a kind of a unique place, right? We have condos, we have single family, we have very high-end properties here. Now the average is look at sometimes $1 million just to get into a house in some places, and the condos, especially like in Brickell, you're looking, was it 500,000 just for something that's what we consider decent? 1 bedrooms, 2 bedrooms, or starting just under $1 million, and they go up from there. And so we have all these different property types within South Florida, and we have these different type of buyers, and we have these different type of people looking for financing. Let's talk about condos, because that's obviously a big component of our market here.
Right.
Condos. What kind of lending, what are we looking at as far as the condo market when it comes to lending?
Well, every building has, its kind of ups and downs.
Absolutely.
Right? So You have some buildings here in Brickell. Well, from your visual there,
Yeah.
you can see some buildings that currently have, some problems with.
I don't know. It's like, it's like it's behind me, so I can't. Like, over here, like here, we got the Flatiron. We have, is that the Plaza? No, that's the Plaza, right? Right behind.
No, that's 1010.
Oh, 1010. Right.
Yeah, that's
that's
1060 is right in front of it.
Right. Then you have, I'm all confused, right? Anyway, so let's just continue on. The question.
Some of those buildings just mentioned, currently they're having issues, right?
Absolutely.
So there's some litigation in place. Mm-hmm. Either they're, clawing back on the developer for some additional repair,
right?
And updates, whether it be structural or cosmetic, that needs to be taken care of. To maybe they're just a high investor ratio, right? So you don't see it in this particular image, but one to mention is Brickell Heights for years has had a high investor concentration. So individuals who are clean on paper, 800 credit score, full doc, and so on and so forth. If the building has issues, that's the underlying collateral, right? And so some of the banks may not even have an appetite for that type of collateral, even though yes, you are strong on paper, but the underlying building itself has issues, right? So those are the little, ins and outs that people need to be cognizant of, right? So yes, you're clean on paper, but if collateral is not clean or equal to, you're going to have a hard time placing it, right? So institutions like Chase or your more national institutions, they'll most likely shy away from those types of buildings.
Right.
So on condos, though, as a whole, whether it be domestic, foreign, litigation in place, not litigation in place, we're firing all cylinders. So whether the building has high investor concentration, lack of reserves, or even $20 million in assessments, I can place that particular loan.
Right. And reserves are a big issue now because I think, was it the state? Is it the SB?
Florida statute SB4D rolls out in a couple weeks on January 1st.
Right.
And I think probably going to affect at least 1.5 million homeowners on the low end, in my opinion, just from the phone calls that I've been getting. You're starting to get the investors who are, we'll call, circling the air, waiting for the right opportunity. Yeah. And so the things is your insurance is high, your taxes are high, rents are not really there yet. So the cash flow aspect might be a little bit difficult on the initial, right? So that would be a perfect deal for us, right? Because if you're not showing equal income to equal expenses, right, on a 1-to-1 ratio, you're probably going to limit yourself to a lot of shops, right? And so those are the slam dunk deals for us that I know the underwriting guidelines on how to structure the deal correctly. And that way, we smooth out the bumps, right? And I think that's probably the best way to put it is.
I like that.
I can look at a deal and look at the risk attributes and say, hey, this is not your A+ type deal. This is probably your A- type deal. And this is the reason why, and this is why you're going to get the rate that you're going to get. And I can get it done in a reasonable amount of time.
Out the bumps. I like that. So you put that on your website. I smooth out the bumps in the lending process or the mortgage process when you gain a mortgage. Let's talk, interest rates is always something that comes up. It's a big topic of discussion, question that comes up a lot. I mean, the interest rates, I think I just saw the 30-year was yesterday at 6.67, which is the lowest it's been in a few months. We're talking from, this is a few years ago, there were 2%, 3%, and now at one point they shot up to 7% and a little bit over, even touched, I think, close to 8% at one point. Yeah. And all of this is, there's factors that involve this, but you get this question all the time. You do, because you tell me all the time that you get this question. So, what's the best interest rate I can get?
I have some institutions right now that I can probably price in the 5s for an individual who is squeaky clean. That'll basically compete up against your bankers, which they probably don't want me to, say.
Go ahead.
But, so we'll use HSBC, they're top tier, probably looking for $1 million in deposits,
Right.
right, to help buy down the rate.
Yeah.
I can compete with them on the wholesale side without a depository type relationship.
And so now you're mentioning about not having a depository relationship. This is something people who have that kind of money don't always want to have to move their money from one bank to the next. They may have a good
Yeah.
relationship with that, but I have a 20-year relationship or whatever it is, or maybe a one-day relationship, but I like this bank. I like my banker. I don't want to have to move my money. So this is what you're offering to someone who has the ability to get that kind of loan. They don't have to terminate, or they don't have to establish a relationship. And
Yeah.
you're able to get that. Tremendous.
Yes, I think that's one item that a lot of people don't really discuss up front is they focus on rate. And then when they realize when their file comes out of underwriting and all of the list of conditions that are needed, it becomes a little unrealistic or not obtainable, right? So those are all the pieces that, I definitely am cognizant about when someone calls me up and says, hey, JP Morgan or whatever the case may be, they're quoting a rate of this. And I said, yes, because of your depository relationship and so on and so forth. But at the end of the day, if you're in a 30-day close, right, you're in contract and your finance contingency is up in 10 days and they still haven't given you your conditional approval, that might be a problem. Right. So that
yes, it could be a problem because
that might be a
contract will
problem.
have. Yes, I like what you said. That it could be a problem because when we write our contracts, when the buy for the buyer, there's a line in there, time to get your approval, whatever it may be, and the standard is 30. Like the contract already says 30 days. If you left blank, sometimes the seller doesn't even want to wait 30 days. They want 15. They want 20 days.
Yeah.
I try to get as much time as possible for the buyer because I know how the financing works. And, from just based on our relationship that or just the years I've been doing this, 30 days, most of the time you can get it, but I like to kind of leave a little bit of window. But then when someone says 15, that gets a little nerve wracking because they want the commitment and they want the conditions done, and that's a very short period of time. So then I think someone like yourself who has these institutional relationships and knows where to go is critical for for the buyer and also for real estate agents to know that person like yourself.
Yes.
Hey, look, Mr. Buyer, Mrs. Buyer, hey, we got 15 days. I don't think Bank of America is going to be able to get you that 15-day commitment. But I have someone who can, and this is why a lot of times I like to work with, always like to recommend mortgage brokers because I think the mortgage broker has a wider, what's the word I'm looking for, a wider arena to play in when it comes
Right.
to loans, especially if someone's on a critical time period, 15 days. Hey, you know what? I got the bank, I got the lender. So this is critical for us.
Yeah, going back to that is most will walk into, let's say, a bank and get a very generic pre-approval letter.
Absolutely. Yes.
Majority of the information that's provided is typically on a verbal basis.
Mm-hmm.
So it really starts to open up the door for issues.
Oh, yeah.
And when push comes to shove, if you're, let's say, short on cash and you have high car payment and things of that nature, your ratios are going to start to flip-flop very quickly.
Mm-hmm.
And so by omitting some information on that verbal discussion, it really puts you in the pressure cooker. And so typically when I issue a pre-approval, I'll go through A to Z. So I'll make sure my ratios are correct. I'll already know who I'm going to place this particular request with, and these are the reasons why.
100%.
And that just helps, again, just shave a significant amount of time off of the deal, And so if you're on a 15-day time frame for financing, I want to make sure that I have at least a week of time left just in case there's any conditions or something that potentially might be an issue. As an example, the CPA letter, right? Mm-hmm. or maybe even an employment letter where you have to go through an automated HR
Right.
type process. Some of those you have to call 2 or 3 times, right? Workday, things of that nature. So, I don't like touching deals that I know that I can't close. And if I can't close it, then I'll tell them up front I can't do it. And this is the reason why.
Right.
And at least they'll have an understanding of, okay, maybe I need to get an addendum, maybe I need to get an extension or something along those lines to help make it fit. But, touching a deal and then not closing it, it just puts so much egg on your face. And my close ratio is pretty high.
Right. You're here to close the deal. So you want to get the deal done. Everyone's happy in the end. The buyer gets the property. The seller is able to sell. The real estate agents are happy. You're happy. Everyone's happy. The title company's happy because it's closed.
Right.
That means money is passed. People have they've had a successful closing, which is something we all want. We don't.
Yes.
Last thing we want to do is get to the day before closing or closing, and the deal falls apart. I mean, that's heartbreaking for a lot of people, and it's also because you put so much time into it. It's devastating. I mean, look, we've been doing this for a long time. It does happen, but you feel every time when it does happen, you feel terrible about it because you feel like you failed in some way, and it may be out of your control. Just things happen, and there's nothing you do about it. But like you said, you want that deal to close, and you want to have it buttoned up when you submit it, so that way the extraneous contingencies or the conditions can be easily, I guess, replied to or overcome in a very short period of time.
They're definitely addressed. Correct.
So on just quick, holistic overview, what do you think interest rates are going to be? If we all knew, I mean, we'd all be billionaires because we all won the lottery, or we invested in Apple at the right time in our lives, or invested in Bitcoin when it was $1 or something like that. But what do you think? Where do you think we're in the interest rate market? We're going to be, the next few months, a year even. What do you think?
I don't see rates coming down. Right now we're probably at a 30-year average, right?
Yeah.
So if you look back 30 years, 6 5/8 is probably very close to what that time frame is. Mm-hmm. So we're not in an unusual rate market right now. I think with the dollar strengthening in the recent, it kicked up the 10-year, right? So even though the Fed, lowered short-term rates twice, and we're coming up to another one, there is a little bit of a time gap between short-term rates and long-term rates as far as a correlation is concerned. So I would say you're probably not going to really start to see real effects until maybe the summer. Things are going to have to absorb all of these different changes that are taking place, especially with the new government coming into place. So I think we're in this kind of rate market for a while. The 2022, first quarter of 22 rates, I don't know if I'll see those again in my career, to be totally honest with you.
I don't think we will.
Quoting rates 2.25, 2.5 on 15 and certain arms. I don't think we'll be back in that range.
No, I don't think so either. I mean, there was a real unusual time, as far as interest rates go. Like you said, historically, we've been in when I first started, I think I was doing some of the first homes I sold where mortgage rates were in 8%, possibly. And the buyers were happy. Okay. People will say, well, prices were different. Yeah, it's true. But you were earning whatever you were earning. It's kind of works out to be the same. I mean, inflation, people earn more. Prices have gone up. So those are things that just kind of happen, right? So let's get into how another unique aspect of South Florida that we have here is the foreign national buyer, and where we have a lot of them. We have a lot of foreign national buyers here. So when they're looking for a mortgage, what's their avenues available?
On that aspect, we're firing on all cylinders on that as well. I would say probably in the past 10 days, I spoke to somebody in Paris, somebody in Berlin, and somebody in London. Mm-hmm. And 2 of the 3 were looking to cash out because the euro decreased to the dollar. And so now they're saying, hey, things are a little bit softer on that side of the pond. I'm looking to maybe pull some cash out.
Right.
So, those are low hanging fruit deals for us. I know how to get around the lack of tax returns, US 1040s, lack of credit, things of that nature, maybe not even a B visa, right? A tourist visa, maybe it's a different type of visa.
Right.
So, I like doing those deals. I know who will touch them. And of course, who has no appetite at all for any type of foreign request at all. For foreigners, we're able to offer pretty much every product under the sun, even your exotic type deals like 10-year interest only with a 30-year AM following, right? So 40-year term. So we can get pretty creative on those types of deals. We just recently did one for an individual that was a UK individual living in the Grand Cayman Islands. And he had a short-term rental. And he banked a Chase and he says, hey, I have a good relationship with them. So I said, all right, we'll touch base next week. And so sure enough, next week, he called me and he says, how'd you know? And I said, I've done this enough, so I know, who's going to touch it and who's not. And I said, and Chase is just not going to touch a short-term rental property. So we wound up closing the deal for him. And it was a 7-figure cash out, right? It was a 1.75 cash out deal, which is not a normal request. And so I was able to get that deal done with one appraisal. So.
What, and just curiosity, what was the loan to, well, actually it was a cash out. So what was the value of the property about?
It was a 65 on leverage.
Okay.
65 on leverage. And we basically used the rental income from his rental agency and a CPA letter. And that's all we used.
And what kind of interest rate was that? What do you see as far as interest rate on those type of deals?
Cash on that. He was upper 7s, lower 8s in that range.
That's kind of typical for the foreign national buyer. Another unique issue for Florida, South Florida, is we're a very entrepreneurial place, high self-employment. Yeah. Self-employment. I mean, technically, I'm self-employed. You're self-employed. As entrepreneurs, what's the availability for mortgages for us and people who are entrepreneurs or solo or work for themselves? What's their opportunity to get mortgages down here?
Most have more options available to them than they actually think. Writing off everything and showing a very low, AGI, adjusted gross income.
Yeah.
It's good for you, right? Because you're not paying Uncle Sam. But for a traditional bank,
Uncle Sam, I do pay you, just in case you're listening.
Yes. No, we all pay, right? But I think at the end of the day is people look at it as a double-edged sword. If I pay tax in this bracket or whatnot, then I don't have the income here. So the flexibility is there, but also same with the mortgage products, right? The mortgage products are there. You just need to know how to properly put the deal together, number one, and two, to structure it. So, we do, I would say at least 25% of our book is self-employed individuals. Maybe 40% of our book is foreign individuals. So again, on that market, we're very strong. I love helping, solo entrepreneurs or even individuals who, let's say, left big law, right? Went from a W-2 to now they're a 1099.
Right.
And they said, hey, I need money to start up my business, right? And I have a ton of equity in my property and I just changed jobs. How do I do it? That's definitely something that we can do.
Right.
So we've helped individuals even without a job. As an example, we had a college student who went to UM and, the financial advisor called me up. He says, hey, David, I have this scenario where, he's renting and the seller called him up and said, hey, I'm going to give you first right of refusal. I need cash. So if you want to buy the property, let's do it. And dad couldn't cover it. Right. So we had a program where I left the income and employment blank, right? As an owner occupied property. And we were able to get it closed. And, dad and grandma and grandpa gave a gift of equity and we closed the transaction as an owner occupied.
So the equity came as a gift, but was it asset based loan of how you did it?
No, it was standard, fully amortized loan. It's going to be, of course, sold off onto the secondary market, whether it be an insurance company,
Sure.
a bank, or whatnot.
Right.
But they just have a very special designation to where they don't have to show the ability to repay the loan.
Mhm.
And so we've done a ton of those deals where individuals just tell me straight out of the gates, I'm not showing this, I'm not giving you that. What can you do for me?
Right. Yeah, I guess what was it? The no doc loan, I guess, is that still something? That's what you're talking about now. It's the basically
It's a no doc slash no ratio, right? Because if you keep the income out, right, then you can have 20 credit cards and 5 cars and so on and so forth.
Sure.
But it becomes a no ratio type deal because you're missing one part of the major equation.
Right. Gotcha. And now for professionals, I always hear there's loans available for either for attorneys or for doctors. What's available for those professionals out there when they're looking to buy, because they're coming out of college or university, they're doctors now, they've been there for, studying for way long time. And they've been interns and they get residency. So they haven't really started to make any money. They got a ton of debt behind them. How are they able to buy?
So on the medical professionals, right, the MDs, DOs, right now I can do $1.5 million at no down payment.
Wow.
For attorneys, engineers, nurse practitioners, I can do $1 million up to zero, right? So no money down. And then the individuals who are self-employed, I can leverage much higher than your standard Fannies and your Freddies and banks. So that's a very niche area as well. But we just did a deal for a hospitalist, right? So he was doing his internship at Mercy, and he went to 2 banks, one of which was TD, which kind of follows your very traditional,
very strict guidelines,
and such, underwriting guidelines. And it was a property in Midtown where there was a 558 litigation in place. And I think it was one of your colleagues. And, we got 90% financing on that building. And so the listing agent called me and he says, David, nice to meet you. And he says, I have to ask you, how'd you do it? And I said, I handed the deal straight to the underwriter who was underwriting the deal. And he says, is that your angle? I said, not every time. I said, but I put it together and they liked it and we got them 90%.
Right. So for professional positions, you can ability to get 100% financing up to how much again? 1.5 million, you said?
$1.5 million for medical professional.
Wow. And are the banks, is the lender looking at the debt they're bringing in from being in medical school all that time, or are they just kind of like put it to the side and say, all right, look, you're going to be a doctor, you'll be okay?
Well, the trajectory on those individuals typically is an uphill, right? So they know that the income is here today and such. The debt is definitely calculated. You have to, right? So you have to add the debt. There is a special way that it is calculated. So there is a little bit of a relaxed underwrite as far as the debt is concerned. So, but they know that these are relatively good deals, right? Yeah. So that's why there's a little bit extra incentive for these individuals.
Got it.
So I would say most that we do are typically, hey, straight out of school, because, typically when they've been practicing for 5, 10 years, they're in a different category at that particular point. Sure. So,
right.
Yeah.
Okay. We've pretty much covered a huge swath of lending, mortgages, and I mean, a general overview. We got some specifics, which is great as far as, like talking about non-QM, foreign national physicians. We talked about issues that are affecting the purchase, or a mortgage, especially in the condos here. As far as just curiosity, what's the biggest deal you've written on a residential property?
This year, we've done some rather large deals. Mm-hmm. We just closed an 8.4, almost an 8.5 purchase for a well-to-do individual who actually went to 2 of your larger regional institutions, and they wouldn't do that deal. Just maybe 3 weeks before that, we just did a 6-6 purchase on a single family. Before that, we did another large deal. So we've definitely done a lot of larger type deals because the appetite is just not there in this current environment. So, we underwrite those deals with a fine tooth comb before they're submitted because they're pretty complex in nature. So we'll go through those, forward to backwards before they're submitted. We did one recently for a plastic surgeon, went to his bank and they capped him at $3 million.
Well,
called me on a Saturday and he says, can you do super jumbo loans? So I said, yes. And he says, well, how can you do them where my bank can't? And so I told him that I'll personally underwrite the deal before I submit it, number one. And number two, I know exactly who to hand it to. So if you're clean, then I'm happy to help you.
Right.
So he had a 6-2 purchase and I got him roughly 80% on that 6-2. So 4.96 on the purchase on a 10 arm.
Wow.
And we were done 2 weeks before the scheduled closing date.
That's fantastic. So,
and he called me, and he called me afterwards and he says to me, I've done a lot of loans in my day. And he says, this has never been this smooth. He says, how'd you do it? And I told him what I just told you before. I smoothed out the bumps, and he laughed.
I like that. Yeah. So, you've been doing this for about 20 years now. Like, you have a ton of repeat business and you get a lot of referral business, obviously. So, which is obviously critical. That's critical to my business as well, which, if you gain a lot of repeat and referral, that's obviously a testament to the business that you do and the service you deliver.
Yes.
When you said something about the plastic surgeon called you on a Saturday, he can't call his banker on a Saturday. They're there Monday through Friday, maybe 9 to 5 if they don't cut out early. So again, this is something I think that people in the real estate world don't understand is, there's a service that, because I think a mortgage broker brings is that, you're going to answer your phone on a weekend, even if you don't want to, but you're going to, because that's how your business is conducted. This is how you keep your business. This is how you keep this is how how we keep our customers happy and our clients happy. And it's what leads to repeat and referral business. Right. So how does, just out of curiosity, just one more, I know Fannie Mae raised, just before we get into, kind of wrap up, but Fannie Mae raised their limits to how much now?
It's going to be 860 and change. Some lenders now have already started to implement because, they want to kind of start their new book for the new year. Yeah. So I can take in deals. I just can't close them as of right now. Right. So that is an option, but Fannie and Freddie have recognized in the last few years that we have to increase because we're losing out on market share, right? That market share is going elsewhere. So they've definitely, in the last few years, have ramped up where that number really has not changed for many years.
It used to be like maybe 400,000 for forever. Then he went to
407 and 417.
407, that was the number. Yeah. And that just doesn't keep up with, for certain areas, like for South Florida, our prices are not at 407, not 415. I mean, even at 806,000, that's probably where your reach is probably the right number. It's a good number to get deals done at, but it's amazing, that 407 seems like they were stuck at 407 for forever.
For a very long time.
Yeah. So how does someone get in touch with David Krebs? Where can they find you?
So I'm pretty reachable. Phone is probably the easiest. Second, I would say, is email. We get a good amount of traffic on our website. We have a good amount of content. Very easy to read, very helpful. I find having a lot of good, content that's easy to digest, answer questions and things like that. Not just from an educational standpoint, but kind of gives an idea of, what we're able to offer that kind of separates us from the others. And then we have some social media and such. LinkedIn, I'm very big on LinkedIn, a little bit on Instagram and such.
So let's give everyone out there your website is it DAK Mortgage, MORTGAG.com. So that's DAK is your initials, so people can remember that. David A. Krebs Mortgage. What's your phone number? What's a good number to get that people can reach out to you?
The only number is 321-239-2888. 2781.
Say that one more time.
321-239-2781.
Right. And remember, people, he will answer the phone. It's a critical because a lot of people just, in our industry do not answer their phones, and, business will go elsewhere very quickly. They'll move on to the next person, the next email, whoever is, out there. And what's your social? Yeah. Instagram, Facebook, or in LinkedIn, where can people find you on there?
So LinkedIn is just, I believe, my name, right? So
Okay.
David Krebs.
Right.
And then for Instagram, I think it's just the business, DAK Mortgage.
DAK Mortgage, right, on Instagram. Check him out, give him a follow. If anyone is listening or watching, definitely give David a follow. Reach out to him. He's tremendous, as far as that goes, as mortgages go. I've bounced a lot of questions off of you over the years. We've done a bunch of deals together, and the key is the deal's closed. They got closed, and the buyers were happy. Because sometimes there was a few where you pulled off a miracle. So that's why I want to talk from personal experience, people who understand that, I deal with people that I done business with for a long time. And if I didn't have a good experience, or my buyer didn't have a good experience, I'm not coming back necessarily. But, someone who I've had a great experience with right at COVID, you pulled off a few miracles when we were going to shutdown and everyone was freaking out. And, I was freaking out a little bit, but you know what? We're gonna get it done. We're gonna get it done. And we got it done. We got those. And we were in lockdown. We went to lockdown, and we were doing closings in lockdown before we opened up again in the state. So that's just a testament, to just keeping a level head, keeping it cool, and really just keeping it moving forward, even when things got crazy. And look, hopefully we never repeat those times. But it's good to know that there's always someone level-headed like yourself who can get through those crazy, hectic times. I hope never to repeat it. But hopefully all deals are easy. They're all layups from now on. But we all know they're never going to be all layups. And it's always good to have someone on the side who can cut through the red tape and, like you said, smooth out the bumps. And again, I think you got to make that your catch line. I think when next video you put out, you got to put smoothing out the bumps, or I smooth out the bumps. David A. Krebs. All right. Again, thank you for coming on with me today. I hope this was good for you. You enjoyed it. I know I did. It's always fun to talk about things that we have a common interest in, other than cars, and and the stock market, I keep on kind of looking at the corner of my eye, seeing how things are going today. Well, hopefully things continue on an upward trend for all of us in the business. That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.